What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have 3 monthly dividend stocks slash real estate investment trusts. Keep an eye on. I own one of these. I'm gonna tell you I love this one, and I bought the dip on it. And these are your request again. So make sure you subscribe and hit the bell. I know a lot of you guys are saying, "Hey, you know, post a video on this." Well, I have. You got to hit that notification bell on certain stocks. And by the way, Rob, thank you for this shirt from Palmia Beer again. You're doing an amazing job out there in California and Vegas. So check out Palmia Beer. He hooked me up with a few samples and a free shirt. I'm not sponsored or paid by Palmia Beer, but check it out. It's doing really well out there in Vegas and California. So it's a lemon infused beer, so I highly encourage you guys to try it. All right, let's check these stocks out. Here's a monthly dividend stock that just resumed its dividend recently, and the pandemic just killed these guys. I mean, look at this. They're 536 at the time, and now they're 1634. Just took a beating. That's Apple Hospitality REIT. APLE has a dividend yield of 0.24%. Go figure. I mean, they just resumed their dividend. They were getting killed because of the pandemic. Market cap 3.66 billion US dollars. Its year range is 1299 to 1744. Its day range is 1581 to 1645. Previous close is 1602. So keep an eye on these guys. I'm going to do a review on these guys. So Apple Hospitality REIT is a publicly traded real estate investment trust that owns one of the largest and most diverse portfolios of upscale rooms-focused hotels in the United States. Apple Hospitality portfolio consists of 219 hotels with more than 28,700 guest rooms located in 86 markets throughout 36 states. Concentrated with industry-leading brands, the company's portfolio consists of the 94 Marriott-branded hotels, 119 Hill-branded hotels, 4 Hyatt-branded hotels, and 2 independent hotels. Let's go over their portfolio. Crazy is they actually own some places in Alaska, which is pretty cool. So look at this. 219 hotels, 36 states, 86 markets. Look at this. Over here in Ohio, they actually own some. And here's Michigan, here's California. So 219 hotels throughout the United States. So here's the thing, and they have their little graph. They own more than one hotel in this market. They own a hotel in the market. So they tell you based on the coloring in the graphic if they own more than one in that area. So the big thing is, how are they doing revenue-wise? Again, this is in millions US dollars. Look at this. These guys got hit hard. And it makes sense why their dividends so low. So 803, 898, 1041, 1238, 1270, 1266. Then it went to 601. So they took a huge beating. That's kind of expected. You can play the pandemic card. These guys are very specific. I mean, just like one of the stocks I'll be going over shortly, this one took a hit, and it makes perfect sense why they took a hit. People are at hotels. People didn't want to go to hotels during the pandemic. Risk of getting sick. So all that stuff with all these parameters. Certain states have certain parameters where people can go in and out, and isolation, all that. So, the bug was a big problem for this stock. And I'll go over its dividend history. Look at this. 2015, they were 10 cents. They're not really the best dividend growth stock, but you're going to get a good bang for your buck. Hopefully, they increase their dividend over time. 10 cents, 10 cents, then they hit 1 cent. So they've been down. But I just wanted to show you guys that at the time, they were distributing 10 cents. So keep an eye on Apple Hospitality REIT. Go over in the next dividend stock. This is another one that took a big hit during the pandemic. Whitestone REIT. WSR is a symbol. 1.0 is 12. It was 1351. Now it's 1004. These guys took a hit during the pandemic. They're sitting at 1004. Previous close was 1015. Day range was 984 to 1014. Year range was 756 to 1077. Market cap is 498.01 million US dollars. The volume is 522.53K. The PE ratio is 35.59. Dividend yield is 4.28%. So what are these guys about? So what makes them different? They succeed and their tenants succeed. That's why they get hands-on with their tenants to give them the tools they need. Fundamental change. We got the position we are in today by turning a development world on its head and looking at things differently. This means taking risks and redefining measures of success. Dollars and cents. We invest in growth and opportunity. We expand cautiously and optimistically while tracking our challenges head on. Let's check their acquisitions. First, I should probably discuss their communities. They build places where people to shop where they need, eat great food, spend time with people they love. No matter what we build, there's one crucial element that can't be overlooked. People are making it for us. So at Whitestone, people are at the heart of everything we do. We seek places that have a need for what we can offer as the resources to make it thrive. By focusing on working with local businesses, we add value to the area with people who are invested in the community. All right, let's see what else. Acquisition. So culturally diverse neighborhoods, income producing, community oriented retail and mixed use properties. So, in densely populated, well located areas, opportunistic and value added potential in Houston, Chicago, Dallas metropolitan area, and Phoenix/Scottsdale. So, okay. What else do they have? They just made an acquisition, so they're pleased to announce that they have an acquired Anderson Arbor 89,746 square foot shopping center located in Anderson Mill Road in Austin, Texas. Okay. So, how much revenue are they generating? Here's one thing just to be aware of. This is in millions US dollars. So 72, 93, 104, 125, 119, 117. So revenue wise, of a up and down thing. So that's one thing to keep an eye on. Let's check their dividend history. 2013, 9 cents. Sat there at 9 cents. Then in 2020, they hit 3 cents. They're slowly going back up to where they were. So they're sitting at $10.04, so the 4.19% dividend yield, a PE ratio of 35.86, and the annual dividend 43 cents. So they took a hit and they jumped back up. So 9 cents to 3 cents. Revenue, so. Apple hospitality rate looks a little bit better. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. You're seeing a dip in both of these. You can capitalize on it if you want, but so far, Apple hospitality rate looks a little bit better. This is still a really good monthly dividend stock if you like consistent dividends, and you're not really gonna get a good hike, kind of like Prospect Capital. You may get a hike, but again, remember, 90% of what real estate investment trusts make go back to investors, or else they get in big trouble. Let's go to the final dividend stock. You guys wanted this one, and I own this one, and I'm long on it, and I'm very excited about this one. That's EPR Properties. EPR is a symbol. Its dividend yield is 6.77%. PE ratio is 337.63. Volume is 555.85K. Market cap is 3.31 billion US dollars. The tier range is 3861 to 5607. Day range is 4311 to 4466. Previous close was 4379. What has me excited about these guys? So one, not doing too hot against the S&P. They're cheap right now. Compared to $70, they are cheap. So the dip is there still. Remember, entertainment properties. So because of the pandemic, these guys took a huge hit. So I'm going to go over these guys with their portfolio. So EPR Properties is a leading diversified experiential real estate investment trust specializing in select enduring experiential properties in the real estate industry. 358 locations, 6.5 billion in investments, 200 plus tenants in Canada. So look, AMC, they're a landlord to them, again for golf places and for skiing. So they discuss their research on it, basically with how people prefer to do things. They have eat and play. So look at this: golf and entertainment complexes, bowling, karting, entertainment districts, family entertainment centers, gaming, casino resorts, ski-based lodging, water park lodging, national parks, theme lodging, ski, metro, regional destination, fitness and wellness, fitness centers, climbing gyms, spa clubs, youth sports, athletics, live venues, concert values, performance value, and e-gaming, cultural museums, zoos, and aquariums, attractions, amusement parks, water parks, and marines. So it makes sense why they took a huge hit, because people can't go there. The pandemic hit. They couldn't go anywhere. They weren't allowed to go anywhere. It's because of the regulations by the CDC and the guidelines. I'll go over their portfolio real quick. They also have private schools and early childhood education centers, cultural, like I said, the gaming. Actually, I'll show you one thing which is pretty cool. The 13 properties, they go over that real quick. And one of them is actually in Ohio. And that's kind of cool. If I can click that property, see their map. Ah, there we go. Property map. Look at this. In Ohio, they actually have some resorts, which is pretty cool. Where I'm from, and I used to ski here. I've only skied once in my life. I actually did very good. And Alpine Valley, Boston Mills. I've been to Boston Mills. It's pretty cool. That's where skiing is. So that's one thing. So they're well diversified. And I'll go over their revenue. And it makes perfect sense why there's a dip there. So it was in millions US dollars, 385, 421, 493, 518, 639, 651, and then 414. It makes perfect sense after they took that huge hit and huge nosedive, because they're a real estate investment trust that is focused on entertainment in the entertainment industry for people and experiential. So those things were closed. Nobody could be there. It's just like what happened with Carnival stock. That price per share went down because people couldn't go anywhere. They couldn't go on cruise lines. That's one thing was an issue for them. And that's what was an issue for these guys. So I'll go over their dividend history. So this is what excites me with these guys. 2013, it was 26 cents. Then it hit 28, then 30 cents, then 32, then 34, then 36, 37 in 2019. 2020, they hit 38 cents. And boom, they suspended their dividend because of the pandemic. They just resumed their dividend in July. They're at 25 cents. So eventually I see them. Again, this is not financial advice for entertainment purposes, only disclaimer in the description. FFO is the most important thing with real estate investment trusts. Their annual dividend is $3. Their dividend yield is 6.74. Looking at the trends, when they start generating more money, I see their dividends start going back up. Again, that's not guaranteed, but guys took a big hit. They're going to make a rebound, and they're going to come back with a vengeance. So let me know what you think of this video. If you guys are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Again, Rob, thank you again for this Palmia shirt. So I'm probably not going to post a video Sunday because of school and stuff. I need to catch up with my lectures, but I wanted to post this one after I did my homework Friday night. And let me know what you guys think of these monthly dividend stocks. Which one do you like in order between Whitestone REIT, Apple Hospitality REIT, and EPR Properties? Take care and have a good one.